Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Moonriver. I do want to say that I'm not a financial advisor and you should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right-hand corner of the screen. Now let's jump into the TA. So taking a look at the 4-hourly chart, in the last video, we saw this falling wedge playing out here, and we did see a very nice breakout November 22nd, and we did have sort of a retest here, and we came up, and as you can see, this level here, this Fibonacci retracement level at $8.20 is a really strong resistance level, and that is the 1.272 Fibonacci retracement level. And as you can see, we've held that level as support on multiple occasions here. That is why this level is right now turning into a resistance level. So every time we get to that area, we start wicking to the upside, you get strong selling pressure. That's why the price cannot break through that area. Now, if you're buying for the long term, this really doesn't matter, because if I'm buying to hold for the next couple of years, and I know that the price is very likely to come back up to, $300, $400 per token, then I'm not worried about these wicks. All I'm worried about is that I'm not going to have enough money to buy as many coins as I want for Moonriver or for the next bull market. And our mission here is to accumulate as much as we can, obviously. Invest only what you can lose. Don't make any degenerate swing trades, or don't try to enter futures. Just be careful with your assets, especially when we are very near the bottom of the bear market. Now, no one knows where the actual bottom is, but we are down on Moonriver. Let me zoom out and let's see how low did we go from the all-time high. Actually, we're gonna do that a bit later, because this is the 4-hourly chart. I'm gonna have to zoom out quite a bit to get back to the all-time high price. Now, the Fibonacci retracement that we have here is with the swing high that we printed in November and with the swing low that we printed in October. And our 1.618 target was perfectly met here at the end of November, November 21st, November 20th, right, at $7.25. We were in this falling wedge. Right now we broke out, but we're seemingly coming back down. So we didn't have that, strong break to the upside where we go and take out our technical target at $9.55 or 60 cents, whatever it was in the last update. We didn't even retrace to the first fib level that we lost here. We did have a wick all the way back on November 14th. We did have a wick to the first Fibonacci retracement, but really, if you're looking for a strong backtest of resistance, you should start breaking out and you should start closing candles below that. That's going to tell you that's a strong level of resistance, and you come back down to retest key levels below. As long as we don't lose this low that we created in November, we're going to be good. But there's always Bitcoin, right? Bitcoin can always start dropping if we get some more bearish news. If for whatever reason we might see Bitcoin go to $10,000, altcoins will get obliterated. Now, of course, not every altcoin is going to go down 50%, because, for example, you take a look at Polkadot. It's not really dumping with the markets because all the sellers have basically sold. So if there is no one left to sell, then I don't think there is going to be any selling pressure, right? And that means the price isn't going to be driven down. So this could be the case for Moonriver, since this is a low cap gem. It's below $100 million market cap, and the project is very interesting in my opinion. And I think investing all of your money into this one is wrong, because you should never do that with a low cap gem. But having a portion of your investments in Moonriver is a very smart choice. Now let's see what other support levels we have here based on the Fibonacci retracement, because there is always the chance that we might lose this low in November, right, at $7.25, which obviously is a great buying opportunity if you want a dollar cost average in. Even right now, this is a great level to dollar cost average in, anywhere between $7.80 to $7.25. Great area to accumulate, especially if If you have been buying Moonriver at $400 right up here, right, $70, $80, $316, if you've been doing all of that, then this is a great area for you to start creating a strong Moonriver position. Okay, now if we start losing this low, you're looking at $6.32 as your next Fibonacci support level, because this is our second fib level. This is our capitulation target. So usually if you start losing the 1.618, you target the second fib level, and that's sort of your, bottom. But if we don't get there, you can still set up some buy limit orders in advance. If we don't get there, no big deal, right? Because you're still dollar cost averaging in these areas because you're not taking any risks. You want to be exposed to crypto and to fiat at the same time so that you're ready for a potential dip and you're ready for an uptrend. Now, I would say that it really doesn't matter if we go down to $6.33 or we go down to $5.72. Obviously, those are great buying opportunities, and I will be accumulating at those levels. But at the end of the day, if you know that the project is going to succeed, you know that the team is going to do justice to all of its followers or to all of the participants in the community, I think then you're pretty much certain that the price is going to be recovering to at least the previous all-time high prices, and in that case it's very safe. It doesn't really matter whether you're buying at $7.25 or whether you're buying at $7.82 if you're going to be taking profits, let's say at $200, $300. Really, it's not going to make much difference. So just to remove that level of stress, I would be, dollar cost averaging in right now, and a bit lower if it goes lower, and a bit more if it goes lower. In fact, I would be buying even more. So the lower it goes, the more you buy. That's what I think. But this is the 4-hourly, and let's switch over to the Binance website. Switching over to the daily on Moonriver, as you can see, we did have this major support block. As you can see, this light blue support block is very important because we've been holding it as support since June. We've had multiple retests in September, in October, in November, and eventually we lost it here with a pretty strong move to the downside. We had a bear pennant playing out over here. We started dropping back down. However, we did start a move to the upside. We recovered, and now we're running into the 20 EMA on the daily chart. So there is a pretty good chance, in my opinion, that we might come back up to this previous support block and retest it as resistance. So from where we are right now, that would be a 25 to 35% move to the upside. Great relief rally, in my opinion. Great opportunity to make some money with a cheeky little swing trade. But obviously be careful with that. If you don't see, if you're trying to force a trade, or you're not really comfortable and you're really scared that the price is going to continue going up, I would just stay away from swing trading, right? Because you want to be mature enough that you know what you're doing. And I'm speaking out of experience. I've done a lot of stupid stuff in my crypto career, so to speak. So I'm just speaking out of experience. I would just rather wait until we get to the bull market and then take profits instead of, making these little short-term trades, making like $50-100 per trade. But still, that's not going to be anything near what you're going to make once we enter the bull market. So that's just something to keep in mind. And we're creating some sort of an uptrend here, some sort of a channel up pattern for Moonriver. And obviously, you know that these patterns are usually broken to the downside. So potentially we could do something like this and then have a move to the downside. So I would pay attention to that. If we end up coming back down, you obviously have your low here that we printed in November. That's going to be an important level for us to hold. If we start breaking above the 20 EMA and you're looking, in fact, for a quick swing trade, I would target the daily 55 EMA, which is the red trend line, or the support block, or the previous support block that we had here. So anywhere between $9.80 to $10.66. That's what I would be doing. And let's take a look at the daily RSI. As you can see, we have been recovering since this November low. That was a great opportunity to enter. As you can see, this was at $7.89. So basically you would be sitting at 0% profit if you entered back then, because the RSI has really been this was a little bearish or bullish divergence, I should say, because as you can see, we have a move to the upside on the RSI. So we're printing a higher low, or is the arrow? We're printing a higher low on the RSI, but on the price action, we're actually printing a lower low. This is a bullish divergence, and we can see that it's playing out right now. It is playing out right now. We may see a little pump to the upside and maybe a little relief rally, because the market cap is relatively small, so it's going to be very easy to pump and dump this coin. As you can see, the volumes aren't doing anything crazy right now. The daily stochastic is in the oversold, so great buying opportunity based off of that indicator. And we're getting a bullish cross on the MACD, confirming an uptrend November 23rd. It's been 5 days since that. And November 23rd, basically, you'd be sitting at 10% profit or around 10% profit. You could have been, you could have had that trade if you entered based off of this bullish cross. But for now, the indicators are pointing towards some sort of a move to the upside. It is possible we might see some sort of a relief rally. We're not that overextended from the 20 EMA, so there's less confidence in that regard. But like I said, we haven't retested the support block as resistance. That's the only really thing that I would be looking at, is a move to the upside and a move to the downside from there. So that would be a swing trade opportunity. However, if we start getting there gradually and we don't really see any sort of pumps, then I would be careful selling, right? Because when you have natural growth and slow and steady growth, that's not a sign that we're getting overextended. That's a sign of, healthy growth. So that's also something to consider. Anyways, that is pretty much it for this video. Thank you all for watching. If I missed out anything important, please let me know down below in the comments section. Feel free to follow me on Patreon and Twitter. I'm gonna check you out in the next video. Did I say check you out? Wow.